I reckon we are about middle of the cycle on earnings. Profit share to GDP for large companies stands at about 5%. The previous peak was 7. The macro backdrop will accommodate a higher level this time before it peaks. So I suspect it will go into high single digits or low double digits. So we're kind of halfway there in terms of earnings. And I suspect this will happen over the next 3, 4 years. So we're talking about 20% compounding in earnings. And usually when earnings are compounding at that pace, market valuations will remain kind of elevated. They will not give up. And then, of course, they will hit a new peak. We're not yet at a new peak on valuations. The previous high, which the market hit in early 2008, was about 33 times trailing earnings. So we'll get there. We're not yet there in that in terms of valuation peak. We're not there in terms of earnings peak either. But the things to note are, I think, with respect to the credit cycle, it's a very benign and modest credit cycle. And credit to GDP in the private sector is still below previous peaks. And it's hard to fathom that we get into a bull market peak without actually getting a major credit cycle. So the thing to watch out is to see how credit pans out. I think we're still far away from a new peak. We will get to a new peak, especially on corporate balance sheets, which remain quite light. So with light balance sheets, with earnings mid-cycle, it doesn't feel like a bull market peak, even though valuations may be a little rich compared to where investors want them to be.